Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, 1:14, halfway through January already, 2020. All right. To me, the big story overnight is the rally back of gold. And you may be saying, it's down $6. What's your problem, dude? It was down a lot more. And not only is it rallying back, the dollar is rallying back as well. This is a 15-minute chart. Let's go to the dollar really quick. And you can see the dollar's up this morning. And I didn't take a look at the news when I first woke up. But when I saw both gold lifting up higher, the dollar drifting up higher, I worried that there was some sort of a geopolitical event that took place similar to last week, or, at least on the scale of what happened last week with the Iranians. And I'm not seeing anything. So maybe it's something we don't know about yet. But going back to gold, you can see that overnight we broke down below this lower band of support. And we did do a double bottom setup. I went to bed right about here. And I was saying to myself, there's no way we're breaking back above this resistance level, not in the first leg anyway. But sure enough, we pulled back, did a double bottom setup, and we ultimately did break through and closed back above support. That is a good thing. So I think we may have seen a bottom here for gold. Now, the problem is for those that are net long of this market and frankly, blindly long of this market, meaning stocks, a rally in gold will probably not bode well for the stock market, because the stock market has been a risk on trade and gold has been a risk off trade, a safe haven trade, similar to what you saw back with the Iranians last week when we thought there was going to be a possibility of war. And gold ripped through the ceiling. We have since pulled back, and it is behaving well, despite the fact it's down about a third of a percentage point this morning. I think that we've seen a bottom here. Hey, Pat, you got up, huh? Good for you. So, gold, again, despite being down, I think we've seen a bottom here, and I'm sticking to it. Let's go to a 4-hour chart. All right, so we do have some resistance above here. A close above 1550 would be very, very encouraging. It may take a few days. We may have to pull back, do a higher low setup, and then break out higher. Now, let's go back to a 4-hour chart of the dollar. I don't know, Patrick. I really don't know. That's a good question. A lot of coffee. A lot of coffee. Here's the dollar, 4-hour basis. We're still setting up nicely here. If there's one chink of my armor to my argument that we may have a bottom in gold, would be the dollar's looking pretty strong here. Now, we do have some economic data coming out later today. I believe it's the CPI that's coming out. Let's bring that up. All right. 14th. All right, so we have a bunch of stuff today. We have the NFIB Small Business Index. That's a survey of small businesses. I believe last month's number was pretty strong. Uh, we'll see how today's is. This could move the market. And I'm going to go over a chart of the IWM. And the IWM, which is the Russia Small Cap ETF, appears poised for a breakout. And a strong NFIB report will help that cause. And that comes out in about an hour. At 8:30, the CPI, consumer prices, and then a couple of Fed heads out later today. And tomorrow we have the PPI, which is a measure of inflation at the producer level. So it's going to be an interesting week in terms of economic data. Let's get back to the pre-market activity. All right, so the dollar looking good here. Bitcoin was on a tear after hours last night, and it's holding those gains. So what we wanted to see, we spoke about this on Sunday night. Where's Sunday? We had a higher low put in. Let's go to a weekly chart really quick. Yeah, we were trading above this breakout point. We pulled back, recaptured it. I think Bitcoin's going up higher. We were bullish on it on Sunday night. We remained bullish on it. And we did some analysis a couple of weeks ago about what Carl. Hey, Richard. Good morning to you. We did some analysis a couple of weeks ago about what correlates with Bitcoin, what anomalies in the market, and inflation, and it was a safe haven play during the Iranian crises last week. It did very, very well. It began rallying with gold on the 3rd, and it's held those gains. Gold pulled back. Bitcoin has held up. So very, very interesting price action. Now, palladium has been on a tear. I don't speak about this often, but I caught this chart yesterday. Talk about being late to the game. This thing is on a tear. And apparently, this is rallying on the demands of the environmental movement. These palladium in certain components to help with inflation. I know they use platinum in catalytic converters. I'm not exactly sure what they use palladium for, but this thing is set to rip. We have broken out yet again this morning, and it looks like we're going up higher. And for those that are just joining in, I have a few symbols I need to go over in a few minutes for members. Those symbols will be Newmont Mining, NEM, AUPH. Pat brought this one to my attention yesterday. Beyond Meat, BYND. I really don't look at those all that much. Not my style, but I'll take a look at it. I took a look last night. I'll take a look at it again this morning. Apple, which we have been watching, is a possible short, and Google. So I will be going over those in a moment. So stick around. And if you haven't hit that like button, if I could ask you to hit that like button, I'd really appreciate it, please. Thank you very much. All right. So palladium breaking out. There it is. Thanks, Richard. There it is. No reaction just yet. We'll go over to the stock market futures next. What Richard just typed in, for those who can't see the chat box, just out. It's 5:11 a.m. Eastern Standard Time. Just out. U.S. may not release details of Phase 1 deals set for signing. I'll tell you, we have made fools of ourselves. We took the currency manipulator tag off of the Chinese. It looks like they're eating our lunch here. Let's take a look at gold. Gold's a little bit better. Let's take a look at the stock market futures. We'll begin with the S&Ps. We were weaker. We rallied. Now we're stalling out here a little bit. This is a 15-minute chart. We'll give this some time to digest any news. Let's go to the Russell. Very similar. We rolled over overnight, rallied back, stalling action. We're down slightly. Not much happening here just yet. The NASDAQ remains up. We were up about 12.5 points last night, and we're giving a lot of that back this morning. So we'll see how the markets react to the news. Thanks again, Richard. What else do we have here? Let's take a look at bonds. Bonds, they were down yesterday. We were looking at the 10-year Treasury bond price, actually the 20-year Treasury bond price. We're looking at the 10 right now. And we were looking at the tips last night. We were discussing it on Market Wrap. And while they closed down yesterday, they closed strong. And I think that we're probably going to get a pop here. We did pop on the 10-year overnight. That means that yields are pulling back. Again, that's bullish for the gold trade. And you may be saying, what's with the gold trade? Why do you keep doing this? Folks, while I believe that the stock market's going to continue higher, I don't think that that's where you should be pumping in new core position money. It's speculative, very, very speculative at this point in time. I think we're going to break. May not be this week, it may not be next week, but it's going to be a nasty-ass break. And I'll bring up a chart. I keep going over these valuation metrics. Here's the share of top 5 companies in the S&P 500, percent of market cap versus net income. Here's the market capitalization. Here's the net income. This is back in the dot-com days. Here we go again. History repeating itself. And you know what? In another 20 years, it's going to do it all over again. But this back here did not end well. I was trading in it. It was an absolute and utter disaster. So, those who forget history are condemned to repeat it. I have zero intention of going back down that road. So, we're building positions to take advantage of what we perceive to be a major sell-off in this market. And it's going to happen. You have a lot of speculative money chasing, frankly, garbage stocks out there. All right, so bonds looking good. And let's go over to Nat Gas. Nat Gas up again this morning. Good. All right, so this is an interesting setup. We have a cup with handle formation. This is on a 4-hour basis. Okay, so we're getting ready for a breakout here on nat gas. Let's go to those stock chart requests. All right, NEM, Newmont Mining. Let's bring up TrendSpider. All right, so this is a monthly chart. We are trading just shy of the upper band of resistance on a monthly basis. Obviously, we've backed off the highs of the month. Let's just bring up GLD for a second. Actually, GDX. Yeah, it's trading consistent with the GDX. All right, back to Newmont. All right, so the first thing that jumps out, obviously, we have resistance above. Let's take a look at possible entry points here. On a weekly basis, I'm not seeing one. We've come a long way. We're digesting those gains. And what I'd be looking for right now is a higher low support level. To consolidate at. And we may have one here at 42.04. It acted as support last week. It acted as resistance back in January. Then again, January of 18. And then in April as well. So far this week, we have a bearish reversal bar. So we may have some more downside here. Let's go to a daily chart. Yeah. We gapped up higher yesterday, but then closed off the highs of the day. But it did show relative strength. I mean, the gold mining sector was down as a whole. Yet NEM closed up higher. So that's somewhat bullish. Just keep an eye on your Stokes, both lines down below the 50 mark. Let's take a quick look at the 2-hour chart. And this is what I'm using right now. I'm looking for a continuation breakout using a 2-hour chart. And here is your upper band of resistance at around the 42.50 mark. So probably some sideways consolidation here. And then I'd be looking for a breakout. I think the shares can be bought on a rally to close above. Let's be safe. Let's say 42.75, because that takes us above not only the upper band of resistance, but it takes us above this topping action right here. So we have some sellers above, a breakout above this upper band of resistance in red, and then above this horizontal resistance level 42.75 would be a good entry point. The next chart up. I'm going to circle back in a minute. I want to take a look at the futures, see if there's any reaction. I think they may be numb to it now. They know there's no deal. Wow. Jesus Christ. All right. All right, so I've already gone over this one in the past, and we have an alert set. We're looking for a pullback and a retest of support. That is yet to fire off, but I think it's going to. This can't be touched right now. We're trading up and above on a monthly basis, the third standard deviation Bollinger Band. Weekly chart. Yeah. I think that there's a good chance that we pull back, retest support. Now, when am I wrong? On a rally and a close above this upper band of resistance, but I still wouldn't make the trade because I have to go back and respect the higher level view. We're trading at current above the third standard deviation Bollinger Band on a monthly basis. I'm not buying the stock. I'm not doing it. Not at current. I need the shares to come to us. That froth has to come off. Daily chart. We are consolidating at support. But again, down here is where I would want to look to get involved with it. It's still too frothy for me. So I would avoid right now, but if you're dead set, you're trading this no matter what the monthly chart says, you could buy it here with a stop loss right below yesterday's lows. Those lows being 19.41, that's okay. If we rally up and above 20.70, that's okay. Probably the best would be up here on a close above 21.24, and that'll send you up to recent highs. But again, very frothy on a monthly basis. I would avoid this. Okay, we'll keep an eye on it. I have that alert set. All right. Beyond. I have zero idea what the numbers look like. Okay, let's take a look at statistics. Forward PE 300 spot 89. No earnings. Quarterly revenue grower. But these stocks are subject to dilution. How much debt do we have? Not bad. Short interest. Shares short relative to the average 3-month daily volume. Not huge. A little over 2 days to cover. Given the technicals, because I was looking at this last night, I have little doubt that you have new shorts trying to short this thing and getting shaken out. We'll begin with a weekly chart. Not much data on a monthly chart. All right, so on a weekly basis, we are flirting with a breakout above an upper band of resistance. Hey, Sam, good morning. I would like to see here us pull back and bounce off of that level next week. Not that I'll trade it because it's very overbought. We'll go to the daily chart in a moment. I just like to track these stocks. I'm going to go over Apple in a second, Sam. It's got the market cap of Italy. That's funny. Weekly retest. All right, so beyond weekly retest, watch only. I doubt I'll be trading it. We'll keep it active for a few days. Okay. So nice base. We're beginning to break out. Not necessarily, we don't know if we're going to close there. But if we do close there, we'll know whether or not we retest. You can see the alert set here as well. So on a daily chart, we're trading up and above the third standard deviation Bollinger Band. RSI is at current 82.66. Folks, you can go a lot higher. This could easily see RSI 90. Pat could be back above over 200 in a flash. Came to market at 25. Yeah, I think they're selling them at McDonald's now, right? That's a nice little account to have. Yeah, this is nuts. This is nuts. I want to see if I saved my annotated version here. Nope, I did not. All right, let's do that. I like to validate on both chart sets. This is nuts. All right, so I keep talking under my breath here because we have, as I mentioned on the TrendSpider chart, we have the shares trading for, as of the close yesterday, we have seen 1, 2, 3, 4, 5 days of back-to-back flirtation with the third standard deviation Bollinger Band, and we traded significantly above it yesterday. You would think that there's a whole lot more short interest in this name than what there is. So it leads me to believe that you have a whole bunch of newbie shorts out there, very, very weak, getting shaken out. I wouldn't be the least bit surprised to see them rally this up to 136, 138. And then it would be time to short. Shorting before that time is insane. Look at this volume. I was wrong before. This is not shorts leaning in. This is institutional money. Let's do a deeper dive here. Let's go to a 4-hour chart. I think that what's probably going to happen here is that we're probably going to get a snap pullback on Beyond because they have to alleviate this overbought condition. I mean, on an intraday basis, we have RSI in a 4-hour chart, 88.82, pretty extended. So I think that they'll bring it back for a day, perhaps sideways consolidation. I'm not even saying it's going to trade down. Perhaps sideways consolidation, and then lift off yet again. I think it's going up to the 130s before all is said and done. 2-hour chart. Yeah, this is nuts. We're at RSI 91.04. Big volume. Uh, by the way, just a COT data, uni COT data, okay. 89 speculated long and deals 11%. It is even worse than the last report. So what you're saying is the speculative money is far greater than institutional money, long money? Is that fair to say, Sam, just to paraphrase it? They're in Dunkin' Donuts now? Wow. Can you paraphrase it for me, Sam? I want to understand it better. Okay. So Beyond Meat, very extended, expect a pause, and then a resumption. And I think that we're going up to the 130s. Right here. Let's update this. And I'm going to create an alert as well. There's where we're going. We'll probably get, again, a brief pause, a consolidation, and then a resumption. This is where we're going. 130s. All right. What else do we have? We did Newmont, AUPH we did, Beyond, Apple. Okay. Apple. All right, so Apple, we've been talking about Apple quite a bit as being overbought, quote unquote overbought, and it could stay overbought. RSI at current 85.43. I think the real story is here. On the weekly chart, with RSI now at 89.85. It's insane. So what I want to do now is take a look for some intraday divergences. Let's go to a 4-hour first. And it's the intraday charts that give you an indication of whether or not these stocks with no overhead supply, meaning no historical resistance above, whether or not you're beginning to see signs of a divergence, meaning higher highs on price, yet the indicators are failing to validate, or your volume is beginning to drift off. And right now in a 4-hour chart, this is a healthy chart. What's not to like? RSI, higher highs, higher lows. Stokes, higher highs, higher lows. Just keep lifting those stops. Use a trailing stop loss order. Let the market take you out. The chart looks good. I would not say to short this yet. Let's go to a 2-hour chart. A very healthy close yesterday. RSI validating. We closed out the session yesterday on very, very strong volume. So the bulls are definitely in control here. It's not a short yet, but soon. Let's see whether or not we have any indicators here. Nothing really. If we do correct, we'll probably retrace down to the high 270s. Probably pretty quickly. It's a beautiful chart. I wish I could say, based upon the RSI, based upon how far we've come, to go short it. Can't, not yet. Bulls are in control. Sam, in the last website, you can see. I got to take a look at it. Oh, eyes. Yeah, yeah. Okay. Do you have a link to that, Sam? Again? Thank you, Sam. All right. So, EYES, they did a reverse split. And the initial reaction was to sell the shares off. We became oversold relative to the third standard deviation Bollinger Band, rallied back. Now we're hitting a bit of resistance. And you can see yesterday, we did a retrace back down to the lows of August of last year, held and rallied back. So we're looking for a spot to add more here. We're currently long. We're looking for a spot to add long here. I would look for either a pullback and a higher low, but we need to hold this 512 mark or 528 mark, or I would be more aggressive if we rallied up and through 565 and closed there. That would bring us back into this trading range. But the real key for these shares is this. We get a close above this upper band of resistance here. That would be a very bullish trade. And that would be at around about $8 a share, $7 and change. Weekly chart. I think we've probably seen a bottom here. Nice bullish reversal bar last week. So far this week, we have an inside week. I wouldn't be an aggressive buyer here. If you want to buy in a pullback, that's fine. But focusing more on the daily chart. If you wanted a nibble, wait for a close back above the around 580 mark. And it really needs to hold this 528 mark. Stokes are looking good with higher lows and higher highs now. So it looks good. I wouldn't be an aggressive buyer here, but it looks good. What else do I need to go over? Google. This is a weekly chart of Google. Now a monthly. And we are piercing the upper band of this very, very long-term trading range. Here's your upper band, lower band. So it looks like Google is getting ready to go parabolic as well as Apple. We have a new weekly high, daily chart. Nice consolidation here. Google's looking very, very good. We're probably coming up here to 1489 on Google. I overlaid a monthly resistance level on top of a daily chart. Actually, I'm sorry, weekly resistance level. There it is. Off, on. Let's bring up a monthly. Beautiful consolidation. So you can see here, you've had two time frames intersect as prior support, prior resistance, now support. We broke out here on January the 9th, consolidation. Yesterday, bullish key reversal after a retest. I think Google's heading up higher. Alphabet, whatever. Where's my chart? Here we go. Okay, volume. This is a daily chart. Not as frothy as Apple, but it's getting there. Weekly chart. Google's looking good as a long. I think that TrendSpider does a better job of illustrating the buy point. Here it looks a bit extended, but here you can appreciate the support below and where you can put your stop. So Google looks good here. I think it's going higher. Let's go back to the futures market for a moment. I want to see whether or not there's any reaction to the phase one deal and no news on the phase one deal. Not much. Dollar's holding in there. Let's check out gold. Gold lethargic. All right. I think that's it for today, folks. Everybody have a great trading day. If you haven't hit that like button, if I can ask you to hit the like button, I'd really appreciate it. Thank you very much. It helps me out with the YouTube algos. And everybody have a profitable trading day. I'll talk to you soon. Be well.